The Easy Ready Pips Day Forex Trading Strategy for MetaTrader 4. The charts. I'll quickly run through how to set up the charts. In MetaTrader 4, trademark sign is that's what most people use. We use 4 moving averages. A 60 period simple moving average of the highs. A 60 period simple moving average of the lows. A 240 period simple moving average of the highs. A 240 period simple moving average of the lows. Start with a basic chart and click and drag the moving average indicator onto the chart like this. Then make sure you have the following settings. Settings for first moving average. Now, click and drag the moving average indicator onto your chart another 3 times, and make sure you use the following 3 settings for second moving average. Settings for third moving average. Settings for fourth moving average. Your chart should now look like this. If it doesn't, then go through the above steps again. Okay, so that's our charts all set up. Let's start learning the strategy. Direction. So you've seen the chart above we set up. That's all this system requires. In terms of indicators and tools, the rest is up to us. The first thing to note is that we trade with the current trend. We use the MA's moving averages to help us with that. If the red MA's 60 are above the blue MA's 240, then we only look to take long positions. If the red MA's are below the blue MA's, then we only look to take short positions. Now, it's not quite as clear-cut as that, so we have to add a couple of extra rules to this. Number 1, all 4 MA's should be angled in the same direction as the trade direction. In other words, if the red MA's are above the blue MA's, the angles of all the MA's should be upwards, like this. The above rule is the same for short trades. When the red MA's are below the blue MA's, we also was them all to be angled downwards too. Number 2, it is fine for the red MA's to overlap the blue MA's. In other words, only one red MA needs to be above both the blue MA's for a long trade, or only one red MA needs to be below both blue MA's for a short trade. In fact, it's better to look at the 2 red MA's together as a single tunnel, and look at both the blue MA's together as a single tunnel. Here's an example of what I mean. So you can see in the above chart that in the inner box the pair of red MA's are below the pair of blue MA's. Well, they are overlapping a little, but you can see what I mean, right? Okay, so now you know the direction in which we trade and when we take long entries when the red MA pairs are above the blue MA pairs, and vice versa for short entries. Entry. Okay, so we're about a third of the way there. I told you it would be easy. Now the specific entry. So, assuming we have the 60 red MA's above the 240 blue MA's, we're looking for long entries. We get a long entry when price crosses back down into the 60 MA's, the 2 red ones, and the first candle closes above the upper 60 megaamperes. Here's an example. You can also see in the above chart where we place our stop loss. It's always below the low of the pullback for a long, or above the high of the pullback for a short. Let's take a look at a short entry example. Fairly simple and straightforward, right? Good. Exits. I don't put a huge amount of emphasis on the exits. Why? Simply because as long as I stick to the same exit method, whichever it is, I get consistent returns and I don't worry about missing profits or start going down the if only path. Here's what I do and I find it is a nice balance for me. It's not anything special, but it works. I just take profit at 1.51. In other words, I take profit at 1.5 times the initial number of pips I risked. So for example, if I risked 100 pips initially on a trade, I'd take profit at 150 pips. Now if the market continues on and reaches 300 pips or more, that's fine. We have to just accept that. It's the way of trading. Just stick to the same take profit and it will work out. Using our previous trade examples for the entries, we'll look at them again. In terms of take profit, the long example from earlier, the short trade example from earlier. That's really all there is to the system. I hope you like the idea of how simple the system is to understand and trade. Now, there are a few other little things I'd like to mention, but here's what I'm going to do. I'm going to give a number of example trades over the next few pages. Within these examples, I will convey the additional things I want to say to you about the system, tips, tricks, etc. Trades. The following are trade examples to give you a more solid understanding of the system. However, they are actually a lot more than just that. Pay close attention to the examples as I have chosen to show you each one for a specific reason. Each example contains tips, tricks, and hints to make your path to profits shorter. Flip and reverse. It is not too often that my stop loss is hit, i.e., my win rate is pretty good. But when it does get hit, I usually recover my loss right away. How do I do this? I flip my position and take a trade in the opposite direction, taking profit at the same amount I initially risked. So for example, if I took a short trade, risked 100 pips, and my stop loss was hit, I'd then enter a long position right away and set a take profit of 100 pips also. I obviously set a stop loss on this second trade too, typically at 100 pips. Again, but I don't really focus too much on it as it never usually gets hit. Let's take a look at an example. Another flip and reverse. Here another example of a flip and reverse, again on the EUR/1 United States dollar. Our chart. Note, for those who are not familiar with MetaTrader 4 trademark sign the dotted vertical lines are session dividers and show us when a new day begins. Staying out. Sometimes you have to have little rules that help keep you out of trade setups that don't seem quite right. The following trade is one that I never entered, even though all the criteria was met: red below blue, pull back into red, close below lower red, etc. MAs at wrong angle. Remember our rule about waiting for the MAs to be angled in the right direction. Here's an example of a trade that we missed because the MAs are angle upwards instead of downwards. This is the way of trading. We miss this winning trade by sticking to our rules, but next time our rule will keep us out of a losing trade too. Deep pullbacks and shallow pullbacks. You will find that you typically get two types of pullbacks, deep and shallow. They are both valid. However, you will instantly recognize that the shallow pullback is going to typically have a much smaller stop loss than the deeper pullback. While not essential, it is preferable, as this means, while our take profit will still be 1.5 times the initial pips risk, it will be smaller in terms of number of pips, and so more likely to get hit. Take a look at this example of the two pullbacks in action. Lower time frames. Now, the standard exit method, taking profit at 1.51, works well, but on lower time frame charts such as the 5-min and 15-min, I will quite often just take what I can. I do this by trailing my stop loss behind the last two candles. For example, see these trades taken intraday on the 5-min chart. This exit method is something that I like using when I trade actively on the lower time frames. However, if you want to use the standard take profit of 1.51, then this works fine also. Over and out. Well, that's the system. It's time to trade it for yourself now. Remember, don't expect to get rich overnight, okay? This is about making an intelligent decision to invest in a genuine system.